Yeah, and what a swan song for the great Ed Harrison here at Real Vision to do that incredible piece.
Yeah, absolutely. Yeah, really great piece.
So the questions are rolling in, and I want to start asking these, unless you have something else that you want to touch on, Raoul, before we jump in.
No.
So the first question is one that I've been thinking about. I know you've been thinking about. It comes to us from Ryan, and the question is, consensus is that inflation has started, but Bitcoin is struggling. What are your thoughts?
I think it's wrong to try and analyze Bitcoin with a macro perspective outside of the longer run. So the longer run is central bank balance sheets are expanding, and that's an ongoing process that will, over the next decade, we expect that to continue. There is very limited correlation between Bitcoin and any other macro thematic. There's very few factors that you can isolate. The factors in Bitcoin right now is this mining shutdown and restrictions in China, and that is causing selling. What's fascinating is crypto volumes have imploded. So that's telling you that the liquidations are over. I think we're in the final stages of this repositioning from China, and the markets will stabilize in due course. We're already seeing whales accumulating at a very rapid rate now, and it feels that the process of Chinese handover of crypto to the world is close to an end. It always happens on the bloody weekend. I don't know why. The Chinese are obviously too busy to do it during the week, and it's only on the weekend they can hit the sell button, and then we have to deal with that. But it is what it is, and I've talked about this a lot. It's very similar to 2013 in Bitcoin. The peak to trough sell-off was about 65%. It feels that this is going to be something very similar, and then before you know it, the narrative changes. I was swapping emails with Tom DeMark, who very graciously sends me the odd email about stuff, and he was looking for the market to trade lower over this weekend, and he's been telling me this for a while now, and he was looking for a potential low of about 25,000 in Bitcoin. That would be the low. And I'm getting a number of different corroborating evidence that somewhere between here and there, and probably in the next week, maybe even less, is the low. And that's how I think about it too. I think we're very, very close.
Yeah, three things. Number one, I think that's spot on about the Chinese story is what's driving the short-term price fluctuations, not the broader macro story or even the broader use case for Bitcoin, or skepticism about it, I should say. Number two, really interesting to me to just watch this and see that there seems to be a floor support at around basically the 50% retracement from the 52-week high around 32,000. I know it's dipped below briefly, but it has bounced back relatively quickly within a period of I think 2 or 3 hours when it dipped down to 29. There seems to be some support at 32,000, 52 week high, 50%.
Also, what is interesting is there is this very obvious head and shoulders pattern, which everybody's freaking out about, but it broke it last week and then went straight back above it, which is interesting because normally a pattern like that breaks and it free falls. Let's see what happens over this weekend. But I think people should be on alert for a reversal soon in all of this. That's how I'm looking at it. I think we're done in time and price, pretty close.
Number three, Raoul, why the hell do people liquidate their positions during the most illiquid periods of the market on the weekends? It's baffling to me.
I just don't understand. Or has the market got itself in this psychological mess where they fear the weekend? What's China going to do to traders close out their positions? I have no idea. It's the madness of crowds. People always do the wrong thing at the wrong time.
Yeah. Here's a great one, going back to some of the macro themes that we've been discussing. It's from N. Renovatio, and the question is how to navigate risk of a potential transitory strong dollar while still playing the exponential age thesis. Raoul, thoughts on the strengthening dollar and the exponential age?
I don't think the strengthening dollar is an issue because it lowers inflation and it means that US assets are more attractive. So I don't think that's the issue you have to hedge for exponential age. Exponential age, you actually need to hedge with interest rates. So you might pair, some puts on the TLT against your long positions in these stocks. I haven't yet scaled into my exponential age bets. I'm thinking I might do something very soon, but I have not done it yet. So I'm still 100% crypto, looking to allocate money into these themes, but I really need the inflation story to be clearer i.e. bond yields telling me that it's safe to go ahead. I just don't have that yet. If you want to go early, and there's nothing wrong with that because it's a long-term theme, I'm just trying to finesse the entry point, then you can buy some puts on bonds, and maybe that's the easiest way to do it.
Yeah. Once again, back to macro from Sir Pale Rider. Question for Raoul: what are the macro factors that historically lead to stagflationary environments versus inflation or deflation?
Stagflation is something the market always shouts about, and I've never seen it. so not in my investing lifetime has stagflation been an issue. It was probably an issue when I grew up in the UK at the end of the 70s, but I don't see that. So that's like sticky inflation and lower growth. I've just never seen that happening for extended periods of time. I think it's a temporary phenomena driven by the business cycle and depending where you are in the business cycle. Now, could I be wrong? Of course I could be. Could we have structurally changed something that creates stagflation? Could it be the massive fiscal stimulus? It's possible, and many people are betting on that. My bet is not currently on that idea.
Yeah, here's one that comes to us from George Osklis, which is, will rising USD make euro seem to be in an inflationary phase, and will policymakers then want to tighten?
Yes, there is a risk of that. If the euro fell sharply, it would add inflationary pressure to Europe, or perceived inflationary pressure. However, Europe is pretty much not a closed economy, but most of the commerce from Europe comes within Europe. So it doesn't have as direct linkages as it would do elsewhere. The US, for example, being the world's largest importing nation, it becomes more of a problem. For Europe, less of a problem, but at the margin. And at the margin, that would then filter through, let's say, in 6 months' time or so. By that stage, we're probably ready for the next wave of economic growth and inflation or bond yields rising. So kind of okay. It's okay for now, but we need to watch that.
Yeah. I've got a very detailed question from Thomas that I'm going to simplify a little bit, which is, Raoul, how are you thinking right now about COVID, the spike in cases in some places in the world, vax statistics, and the economy more generally?
I think COVID is going to be with us much longer than most people expect, and it will continue to have rolling disruptions to supply chains and issues for global consumption. Over time, what markets care about is the rate of change, and the rate of change is improvement. So the markets will not worry. The human instinct is to worry about what happens if it comes back. The markets tend to look at the rate of change and say, even if it comes back, it'll be less than it was, and therefore it's okay. Barring anything that is major, and I think we will get a fear of major. I remember very much after 9/11, everybody was looking for a problem somewhere. It was fear, right? Fear. So we still have a lot of fear in markets. People fear a recession. People, another recession. People fear a lot of things. They fear the virus coming back. They fear their restrictions their freedoms being restricted again. I get it, but usually it's misplaced. It's like after a hurricane. It feels like a hurricane here. It's a big stormy day, but after a hurricane, everybody fears the next hurricane.
Right.
People always want to buy insurance after the house has been robbed.
Yeah. Raoul, here's one that comes to us from Jeff. I'm going to do a slight paraphrase here. Jeff is asking this question, basically. At one point, you had said that there was the potential, in your view, for negative rates in the U.S., potentially going out as far as the 10-year going negative. Jeff is wondering if that's something that you still think is a possibility in the longer term.
Yes, absolutely. I think the chart of truth, the 30-year chart of bond yields, probably still holds, and that we would have a new low. I don't know, maybe, like Japan, eventually what you see is in the next kind of weaker growth period, weaker inflation period, that bond yields don't make a new low, and then it'll suggest things have stabilized. I still think it's a possibility. I think the market discounts it, and they don't want to believe it yet, because so many people are inflationists at core, but this deflationary trend driven by demographics, globalization, and technology are relentless.
Yeah.